before I get into the heart of my questions today, there was a slight discrepancy in some of the testimony and questioning from earlier today. I just wanted Ms. Haas to clarify very quickly. Earlier today in the hearing, Representative Velasquez asked about proprietary trading on the Coinbase platform. And in that moment, I believe you had told her, quote, that Coinbase does not engage in proprietary trading on our platform, all prices are established, et cetera. However, in looking at the Coinbase rules under section 3.21 under Coinbase Corporate Ops, it says, Coinbase Inc., which owns and operates Coinbase Pro and Exchange, also trades its own corporate funds on Coinbase Pro and Exchange. And I just wanted to give you briefly the opportunity to clarify.
Thank you so much for the opportunity to clarify. There's a few things that we do in our business. So one is we do have a corporate investment portfolio that every month we make an investment of crypto and add to our balance sheet. We've not sold that. We don't trade it actively, but we do increase the investment on a monthly basis on pre-established investment protocols. We do buy those on our exchange.
Got it. Understood. Thank you very much. So to the heart of the matter. Crypto, as we know, is a growing industry. It's rising in market value from $500 billion last year to more than $3 trillion as of November of this year, 2021. There are a lot of advocates, proponents of the cryptocurrency industry that discuss the creation of new digital currencies, I should say, and building safer, more inclusive system outside of the traditional financial sector. But I kind of want to explore this assertion a little bit more. Mr. Allaire, a substantial portion of the buying and selling of cryptocurrencies is done with stable coins, correct?
A significant amount is traded with stablecoins, yes.
It's about 75%. Does that sound about right to you?
I don't have the data in front of me, but it does sound roughly correct.
And these stable coins are designed to be backed by certain reserve assets, whether they are primarily USD or safe, highly liquid cash substitutes. Essentially, a coin to be stable in value so that people can kind of use it in a larger world of crypto where other coins could perhaps be a little bit more volatile in their value.
I can certainly speak to the design of USDC. I can't really speak to others. Mm-hmm. So yes, USDC is designed as a payment instrument under electronic money law in the United States, and so it's cash and short duration U.S. government treasuries, which is the underlying instruments for the stored value.
In fact, your firm recently announced a transition to one-to-one backing in dollars of USD coin after it was found that only 60% of the coin was backed by cash or cryptocurrency industry, hypothetically, lost its ability to use stable coins as a bridge to trade in and out of dollars tomorrow. Would that cause a significant shift? It seems as though it would not be able to work the way that it does currently, correct?
Well, I think a primary reason why stablecoins are so powerful is that they're a superior form of settlement. And so the existing banking system moves slowly. Funds take several days for them to move, and there are significant fees, and the access to that can be limited. Whereas blockchains operate continuously, and settlement happens at the speed of the internet. And so I think it is important that payments and settlement in these new forms of internet financial products and services can operate at the speed of the internet. And so I think it's essential, in fact.
I see. Thank you. And so lastly, what would you say to some of the folks who are listening to what some folks are saying, not just here on this panel, but in the larger world? So the folks that say, what do you say to the folks that say, basically, this doesn't seem like a new financial system per se, but really an extension or perhaps expansion of our present one?
Well, I would disagree with that. I think what I believe we're seeing is a new open infrastructure layer on the internet, a missing infrastructure layer of the internet that is designed around value exchange and economic coordination, that is rooted in immutable data, the ability to interact with counterparties in a very, very safe way that hasn't existed before on the internet. And really, many of the efficiencies that the internet brings in terms of moving information, brought into moving value, but also with greater degrees of security than are often offered through the existing financial system. So I really do believe we're building a new global economic infrastructure layer, and we're certainly—
And you would say that that's not distinct. You would argue that that is distinct, not an expansion or an increase in the sophistication of our current financial system.
I believe, for this to take hold, it needs to be well integrated with our existing financial system, and we've long believed in a kind of hybrid model that does that.
Thank you very much.
You're welcome.
Thank you. The gentlelady's time has expired. The gentleman from Ohio, Mr. Gonzalez, is now recognized for 5 minutes.